I want to tell you about a Tuesday morning that changed the way I see money. I was sitting at my kitchen table, same table where I've had coffee for 30 years. Bills spread out in front of me, reading glasses on, the usual. I was about to write a check, like I've done every single month without question, when something made me stop. I don't know what it was. Maybe it was the number. Maybe it was the fact that I'd written that same check so many times my hand knew the amount before my brain did. I put the pen down, and I started asking questions I should have asked a long time ago. What I found out over the next 3 weeks, I'm still angry about it. I'm 57 years old. I've been paying bills since I was 22. Rent, car payments, utilities, mortgages, plural, health insurance, property taxes, all of it. I never thought of myself as someone who got taken advantage of. I'm not naive. I ask questions. I read the fine print. At least I thought I did. But here's the thing. Nobody tells you when you retire or get close to it. The system changes, the rules change. What you owed at 45 is not necessarily what you owe at 65, and nobody, not your bank, not your insurance company, not your accountant, is going to call you up and say, hey, by the way, you qualify for this exemption now. They wait, quietly, while you keep writing checks. My neighbor Frank is 71, retired electrician. Sharpest guy I know when it comes to wiring a circuit breaker. But personal finance? He trusts the bill. If it arrives, he pays it. No questions. Last spring, I was over at his house. We were having coffee on the porch, and he mentioned, almost in passing, that his bills had just gone up with age, like it was a natural thing, like getting older meant paying more. I asked him if he'd ever looked into exemptions. He looked at me like I'd said something in a foreign language. Exemptions for what? That conversation is part of why I'm making this video, because Frank isn't alone, not even close. According to the Consumer Financial Protection Bureau, older Americans lose tens of billions of dollars every year, not to scams, not to fraud, but to fees, taxes, and charges they were legally never required to pay in the first place. Billions. With a B, and the worst part, a huge portion of it is perfectly legal for them to charge you, unless you know to push back. So today I'm going to show you 5 specific bills that millions of retired Americans are paying right now when they don't have to. But before I get into that list, I need to tell you what happened at my bank. Because without that story, you won't fully understand why I'm as serious about this as I am. About 14 months ago, I noticed a charge on my bank statement, $47, monthly, listed as, and I'm reading this exactly, senior tier account maintenance. Now, I'm not saying $47 is going to break anyone, but it's the principle. I never signed up for a senior tier. I didn't ask for whatever that is, and I had no idea what service it was supposed to cover. I called the bank. The first person I spoke to, young, polite, clearly reading from a script, explained that it was a standard fee applied to accounts that fall within a certain age bracket. I said, what age bracket? She said, senior account, sir. I said, when did I sign up for a senior account? Pause. Long pause. I'll need to transfer you to account services. Account services transferred me to billing. Billing transferred me back to account services. 43 minutes, 3 different people, each one slightly less confident than the last. Finally, a supervisor got on the line, and in a very quiet voice, the kind of voice someone uses when they don't want the people around them to hear, he said, "Sir, that charge should not have been applied to your account. 16 months. 16 months of $47. That's $750. They reversed it, the full amount, within the week. But what really got me, wasn't the $750. It was the silence. Nobody called me. Nobody flagged it. Nobody sent a letter saying we've been charging you for something you never agreed to and we'd like to fix that. The money just sat there, quietly leaving my account every month. And the only reason it stopped was because one Tuesday morning, I happened to put down my pen and look. I called a consumer attorney after that. His name is Dennis. We've known each other for 20 years. I told him the whole story. He wasn't surprised. He said, "What happened to you is a version of what happens to thousands of retired Americans every single month. The difference between you and most of them is that you made the call." Then he spent 2 hours walking me through exemptions, legal protections, and programs that most retirees have never heard of. That conversation is the backbone of this video. So here's what I'm going to do. I'm going to walk you through 5 specific bills, 5 real recurring expenses that a massive number of retired Americans are currently paying when they legally don't have to. And I'm not going to rush through this. I want you to actually understand each one, not just hear the name and move on. Because the details matter, the thresholds matter, the application process matters, and most importantly, the amount of money you could get back matters. We're talking, conservatively, about thousands of dollars per year for the average retired household, so stay with me. This is worth your time. Let's start with the one that stunned me the most. The first bill is one most people don't even think of as optional. Federal income tax on Social Security benefits. Here's what the IRS doesn't put in bold letters. Depending on your combined income in retirement, up to 85% of your Social Security benefits may be completely tax-free, not reduced, not discounted, tax-free. The formula works like this. The IRS looks at what they call your combined income. That's your adjusted gross income plus any non-taxable interest plus half of your Social Security benefits. If that number falls below $25,000 for an individual, or $32,000 for a married couple filing jointly, your Social Security benefits are not taxed at the federal level at all. If you're between $25,000 and $34,000 as an individual, only up to 50% of your benefits may be taxable. Above $34,000, up to 85% may be taxable, but never more than 85%, which means at minimum 15% of your Social Security income is always protected. And that's just the federal level. 37 states don't tax Social Security income at all, not a dollar. States like Florida, Texas, Pennsylvania, Illinois, Nevada. If you live there and you're paying state tax on your Social Security check, stop. I talked to a woman named Carol, 68, retired school teacher in Ohio, who'd been having taxes withheld from her Social Security every month for 6 years. When we actually ran the numbers, she was below the threshold. She had been below the threshold the entire time. She filed amended returns and got back close to $4,000. That money was just sitting there, waiting. The second bill is one that's going to make some of you genuinely upset because of how quietly it's been kept. Medicare Part B. The standard premium in 2026 is $185 a month. That's $2,220 a year, automatically deducted from your Social Security check. Most people accept that as just the cost of being on Medicare. But there's a program, a federal program, taxpayer-funded, fully legal, called the Medicare Savings Program, and it can pay that premium for you entirely. The Medicare Savings Program has 4 different tiers depending on your state and income level. At its most basic level, it covers your Part B premium, your Part A premium if you have one, and in many cases your deductibles and co-payments too. The income limit for a single person, in most states in 2026, is around $1,660 a month. For a couple, around $2,240. Now I know what some of you are thinking. That's not much income. I make more than that. Maybe you do. But here's the thing. The calculation excludes certain income sources. Some Social Security payments, some pensions, some asset types aren't counted at all. You cannot know if you qualify without actually checking. My friend Dennis told me something that I wrote down, and I've repeated dozens of times since. The government built these programs. They funded them. The money is allocated. The only reason it doesn't reach the people who need it is that nobody told them to apply. Roughly half of all seniors who qualify for the Medicare Savings Program are not enrolled. Half. That's millions of people paying $185 a month they don't legally have to pay, not because they can't get help, but because nobody handed them the form. To check if you qualify, go to medicare.gov or call your state Medicaid office directly. The third bill hit closest to home for me personally: property tax. I've owned my house for 22 years. I've paid property tax every single year without question. It's just what you do when you own a home. But here's what I didn't know until 3 years ago. 48 states have some form of senior property tax exemption. 48. They work differently depending on where you live. Some states freeze your assessed property value the year you turn 65, so even if the market goes up, your tax bill stays the same. Some states offer flat dollar reductions, some offer percentage reductions based on income. And in certain counties with income-based programs, low-income seniors pay almost nothing. My friend Robert, 68 years old, retired, lived in the same Georgia home for 31 years, was paying $3,400 in property taxes annually. His daughter, who works in local government, asked him one day if he'd filed for the senior exemption. He hadn't. He didn't know it existed. He went to the county assessor's office, 20-minute appointment, brought his ID, proof of age, proof of primary residence. His annual property tax went to under $900. They refunded $800 from the prior year, and he's been saving over $2,500 every year since. He told me, and I think about this a lot. He said, "I drove past that county building for 15 years, never once went in. The exemption doesn't come to you. You have to go to it. But when you do, it's straightforward. Search for Senior Homestead Exemption in your county name. Bring your ID and a utility bill. That's usually all it takes." The fourth one might be the most important for a large number of you watching right now: prescription drug costs. If you're on Medicare Part D, and most retirees are, there is a program called Extra Help, also known as the Low Income Subsidy, and it can reduce or completely eliminate your monthly premiums, your annual deductible, and your co-payments on prescriptions. In 2026, the income eligibility threshold for Extra Help is approximately $22,000 a year for individuals and around $29,000 for married couples. And resources, meaning savings, investments, property other than your home, are considered, but the limits are higher than most people expect, and certain assets are excluded from the calculation entirely. You can own a car. You can have a modest retirement account. You can own your home and still qualify. Also, starting in 2025, under the Inflation Reduction Act, Medicare Part D now has a hard $2,000 annual out-of-pocket cap. That means once you spend $2,000 on covered prescriptions in a calendar year, Medicare pays 100% of the rest. No exceptions. Many seniors are still paying past that cap because they don't know it exists, or their pharmacy hasn't correctly applied it. If you've already spent more than $2,000 out of pocket on prescriptions this year, stop paying at the counter until you've called 1-800-MEDICARE and confirmed your plan is applying the cap correctly. I spoke to a woman named Margaret at my church, 73, on 7 different medications for a heart condition. She was spending close to $400 a month out of pocket on prescriptions alone. She qualified for Extra Help, had qualified for years. Nobody told her. Her annual drug cost is now under $200 total for the year. That's not a typo. From nearly $5,000 a year to under $200. Call Social Security at 1-800-772-1213 to apply for Extra Help, or go to ssa.gov, Extra Help, right now, today. The fifth and final bill is the broadest one, and for some of you, it will be the biggest number: state income taxes on pension income, retirement account distributions, and investment income. Depending on your state, a significant portion of your retirement income may be partially or fully exempt from state taxation. And most people are never told this when they start drawing down their accounts. 9 states have no income tax at all: Florida, Texas, Nevada, Washington, Alaska, South Dakota, Wyoming, Tennessee, and New Hampshire. If you live in one of these states, you're already protected. But here's where it gets interesting, and where a lot of people leave money on the table. Many states that do have income tax offer specific exemptions for retirement income. Illinois, for example, doesn't tax income from most pensions, 401k withdrawals, or IRA distributions at all, regardless of income level. Pennsylvania is similar, Mississippi, Alabama, and then there are states with partial exemptions that kick in at certain ages or income thresholds. Georgia exempts up to $65,000 of retirement income for individuals over 65. Colorado has an exemption that goes up significantly once you're over 65. Arizona, Kansas, North Carolina all have senior-specific retirement income deductions that most residents don't know exist. My accountant didn't bring this up on his own. I had to ask directly. I had to say, what exemptions do I qualify for now that I'm in retirement that I didn't qualify for before? That one question saved me over $1,800 in state taxes last year. Pull out your last state tax return. Look at what income you reported. Then go to your state's Department of Revenue website and search retirement income exemption, plus your state name, or call them directly. If an accountant does your taxes, call them this week and ask one specific question. Am I claiming every retirement income exemption available in our state? If they say yes, ask them to show you. The good ones will. Now I want to come back to that Tuesday morning, the kitchen table, the pen I put down. For 35 years I trusted the process. I paid what arrived. I assumed the amounts were correct. I assumed that if there was something I didn't have to pay, someone would tell me. That's a reasonable assumption. It's also wrong. Nobody in this system gets paid to reduce your bill. The bank doesn't profit from finding your exemptions. The insurance company doesn't benefit from telling you what you don't owe. The government doesn't send volunteers to your door to explain your rights. The information exists, the protections exist, the programs exist, but they're passive. They sit there and wait for someone to claim them, and in too many cases, that someone never comes. 5 bills, 5 areas where the law already provides protection for people in your situation. Not charity, not government handouts, legal rights that you have earned and that already exist in your name. Social security taxes, Medicare premiums, property taxes, prescription drug costs, state retirement income taxes. Check every one of them. If this video helped you, I'd ask you to do one thing before you close it. Think of one person in your life, a parent, a sibling, a neighbor, a friend who is retired or close to it. Someone who pays their bills without question. Someone who trusts the system because that's how they were raised. Send them this video, because the odds are high that somewhere in these 5 bills, there's money that belongs to them that they don't know they're losing. I'll see you in the next one.